Good afternoon, guys. Welcome back to another Chart Nerd TA video. Today we're going to be covering Algorand on the daily time frame, and I'm going to be taking off and showing you guys some patterns from the last videos that I've done for Algorand, and I'm still in my technical target of Algorand actually retracing back down to this 20 cent area where it started forming this bearish pattern called a rising wedge, where you was caught between support resistance, okay, and you actually lost support of this rising channel here. Now what I was saying is we trade on confirmation, guys, okay. So we was either waiting to go long if we took out this resistance line, okay, but we failed to do so. We came back down, retested as support, and we lost it as support, okay. And you can see that what Algorand done, once it lost this support line here, it retraced back down to this level of support here, in which you can see Algorand has bounced off a few times inside this channel here, okay. So we've got support right now off of this support line here that currently sits at around 23 cents. Okay, so we could see Algorand start to make its way down to this point and see some more relief rally here, but I think the overall target we're trying to get to is 20 cents, okay? So why do I think that? Well, I think potentially right now what we've done is actually confirm that we've created some sort of ABC, okay? So you've got the A wave down, you've got the B wave, which is a lower high than this high, okay? And then right now I think we're in a large C wave back down to support here, where Algorand could actually get a nice bounce, and this is potentially a wave 2 correction within a larger impulsive Elliot wave theory, okay. So potentially this is a really large wave 1, okay. You started to top out and form this bearish pattern. Right now we've lost support of that pattern, we've created a lower high, okay, than the previous high at 30 cents. We've got lower highs, so this indicates depleting buying pressure, and right now you're being pushed back down to these level of support here. So if you do see Algorand start to come down and lose 23 cents, I think this area confirms, okay, we're looking for 20 and retracing back down to where this rising wedge actually started forming. Because what starts to happen is when you do lose support of these bearish patterns, okay, like we did here in this rising channel, we lost this support line. When you lose it and confirm it as resistance, which we did in the B wave, I think right now we're getting this large C wave correction retracing back down to where this rising wedge started to form. Now again, as I've said, on the macro scale of things, I think this is what we've got here is some sort of, this is an Elliott wave theory wave 1, okay, up to this high. Right now we've got an A, B, C down to this wave 2 for a correction of support. And then I think as long as you tackle out of this wave 1 high, I think you could be putting in a larger wave 3. So what we're looking for here is literally to come back for support, back down on this 20 cent area. And I do think this nearly ties up with the golden ratio as well on the fib retracement. So if we get a fib on from this high, retracing back down to these lows here in December, you could see that the 0.618 ratio literally sits at 23.2, and this area of support is at 20.81. So I do think we may get a wick below this low and actually come down to this 0.618, and this could be your A, B, and a large wave C back down for support in a larger wave 1, wave 2 correction. And then if we start to come up and tackle out of this 30 cent high, this would confirm that you've got a low, a high, a higher low off of support, golden ratio, and if we start to come tackle out of this, you've got a higher high. So you've got a wave 1, a wave 2 to support in a large ABC, and as long as we can start to come up after that point and tackle above 30 cents, this confirms that we are in some sort of impulsive move off of these lows, and this is just a higher low here from December, and we're moving in bullish structure. So that's what I'm looking for, guys. I'll be completely honest with you. Because we've lost support of this rising channel, we've turned that support into resistance. Right now, I think we're at least retracing back to this 382, okay, for support here. Now, it's all about what happens at this stage, okay, because that could be the wave 2 correction over, and we could have a flat A, B, C, okay, literally a flat ABC where you've got a resistance and you've got a support, and at that point, if you do start to tackle 30 cents, then this wave 2 might only come down this shallow, basically. So if we do hold 23 cents, I would look to go long to 30, but if we fail to break that, again, this 20 cent range down here is still my target. Okay, it's still my target. Now, another reason why I think we're potentially coming down to this 23 cent mark right now is because there's patterns within patterns. So from here, you can see that we also started to form another rising wedge inside a rising wedge, ran into the previous support as resistance, and right now you've lost support of this smaller rising wedge and are starting to retrace back down to where this one formed. Okay, so there's two rising wedges here, is the best way to look at it, I think. So if we get the fib off and look at this a bit a bit easier. This was the first rising wedge that we was in. Okay, so this was the first rising wedge. We've lost support of the rising wedge, okay, and we started to form another rising wedge within that. Okay, so this is what it looks like. You've got a rising wedge here between support and resistance. We lost support of that rising wedge and started to form a new one. Okay, and right now you've lost support of this rising wedge, so the technical target brings you back down to 23 cents. Okay, so that's a very key area of support we need to keep an eye on for Algorand at around this 23 cent mark. Okay, because if we do start to retrace to this point, okay, as I said, if oh, for God's sake, sorry. If we do start to retrace to this point here and actually start getting relief and tackling out this high, okay, then this is the wave 2 correction over, okay, falling back to this support that we've been holding since the 25th of January. Okay, so the wave 2 can come this shallow and start to break out. So do keep an eye on that 23 cents, guys, okay? It's a very key area for me at the moment. And if you lose that, you're looking to come back down to this 20 cent mark for Algorand here. Where this low is of this rising wedge, which I think is the overall target. And as I said, what you'd have is an A, okay, a lower high for the B wave running into this previous support, and then a C wave, either a flat ABC to 23, but if we lose 23, then I do think you've got this larger correction down to 20 cents, confirming this wave 2, and it's all about holding the support. Okay, so these are the 2 support areas that Algorand has to hold on this retracement to confirm, okay, we're looking to start a next impulsive move. Okay, so on the cards at the moment, what that could provide us with at the moment, if we do start to see this retracement, 8% down to 23 cents. At that point, I do think we may see some relief. If we do see Algorand forcefully get pushed down here, I think we may see some relief. But then at that point, I think if we do see a relief rally off of this 23 cents, retracing back up to this high, if we fail to get a break above 26 cents, I think it's a dead cat bounce, and we've got a smaller ABC in here where potentially you've got something like this. Okay, you've got this A wave, you've got the B wave into resistance, and then you've got your C wave down. Okay, and this would confirm to me at the same time you've got an ABC within a larger ABC basically, and you could be in some sort of Elliot wave here where you've got a wave 1, a wave 2. This could be your wave 3. Okay, if you lose this 23 cents, run into resistance for wave 4, and then you've got the wave 5 bringing you down to 20 cents. Okay, so there's waves within waves. I think, again, because we have bounced off of this 23 cent support multiple times, I do think if Algorand gets to this channel and gets to this point of support, we could see resistance. But it's all about tackling above the golden ratio on the retracement from this 23 cents back to 29. Okay, because if we put in a dead cat bounce and fail, again, continuously put in lower highs, you're getting depleting buying pressure, and this indicates again, if you fail to get back above these lows off of the bounce here, that we're coming down for a larger correction to 20 cents. Okay, so on the cards in order, what I'm looking for, okay, is a pullback to this 23 cent mark, okay, for support. And at this point, if we do start to come down here and see some relief, if we fail to get back above 26, I think you're getting a lower high, and you've got this A, B, dead cat bounce, B wave into a C down to 20 cents. Okay, but if we do start to tackle above this and hold this as support, I think you've got the long on your chart hands here going back up to these areas of resistance, and potentially we could put in new highs. Okay, so it's all about support and resistance right now, all about support. The key area of support I'm looking for at the moment short term is 23 cents, which is currently an 8% short op, and then I think it would be wise to wait and see if we do get a back above this golden ratio or not, in order to confirm if we're going to go long, or if we get rejected and go short down to this 20 cent mark again for that A, B, C correction. Okay, guys, so I hope you enjoyed the content today. If you did, please do like, comment, and subscribe. Again, look for the 23 cent. If we get a rally off of that and fail to break above 26, I think that confirms you're looking for this 20 cent mark here for Algorand in the next few months. And that, I do believe, is about a 17% correction from where we are. About 18% down to this... down to this 20 cent range. Okay, guys, so I hope you enjoyed the content. Do look for those areas of support. Do get them on your charts and watch for them. They could provide great opportunities. Again, 23 cents is a medium range where I think we may see some relief, but if we fail to get back above 26, we're looking for that 20% drop, 18% drop down to this 20 cent mark where this rising wedge originally started forming in this large impulsive wave 1. Okay, guys, so I hope you enjoyed the content today. If you did, please do like, comment, and subscribe. Hit that hit that notification bell from Chart Nerd TA. Take care, guys. Peace out.